What's going on, guys? We need to take a look at the chart and kind of see, exactly what's going on with the price. That way we can make sure if we're dollar cost averaging that we're getting into the best potential prices. So I've got a few things marked up on the chart. I've got a big DCA zone for the 2025 cycle. That's going to be this purple box here. We're running from a price of 0.00053 all the way up to 0.009. So I feel that if your average price is in between this purple box here for the 2025 foreseeable future, you're going to do just fine. Even if, you know, worst case comes to worst case, we barely get back to all-time highs, which I believe we're going a lot higher than that. But even if we get back to all-time highs, you're looking at about a 3 to 4x from here. Now, obviously, if we start breaking into the $1 billion market cap, 2 billion, 3 billion, you're talking about potentially 6, 9, 12x on your money from there. Now, again, there's narratives, there's stories that this could be going to 20 billion, 30 billion, 40 billion. Let's cross that road when it happens. Obviously, you can kind of do the math on that, your own way. Right now, the market cap's 291 million. So all you would need to do is times, the X's that you're going to make times the market cap. So if we get into a 600 million market cap, you're looking at a 2x, you're looking at a 3x, so forth and so forth. So with that being said, I've got that DCA zone, which you can see here. I've got the steel zone down here. We have not broken into the steel zone since the Coinbase listing. Obviously, loading up down here in that steel zone, you would be still well into profit right now. You can see we have a double bottom here close to that 5.5 range. Now, are we going to get back into that range is kind of yet to be determined. I do have this sort of trend line here, right? We created a line in the sand right around 6.5 going back to the 15th, which was a couple of days ago. We held, put in a little bit of a bounce, and now we're starting to break down back towards that trend line. So if you're kind of wondering, when is this going to kick off, right? When are we going to start, seeing higher prices and higher prices and higher prices? Well, for one thing, we need to see what Ethereum is going to do. Okay. Ethereum got very, very close to breaking that $2,800 mark. For me, that $2,800 mark is going to be the stepping stone to getting it over 3,000. Once we get over that price, you're probably not going to see these lower prices on a token like Toshi. Okay. So if you do want to dollar cost average in, as hard as it is to kind of buy when things are red and it seems like things aren't doing anything, that's the exact time that you need to buy. Okay. You don't want to be buying on big green candles like this. You don't want to be buying on multiple green candles like this. Okay. Because the higher you're buying, when you do pull back and consolidate, you're automatically going to go into the red. So if we do start to break down, okay, if we do start to break down below 6.7, we start running towards 6.5, 6.4, if you get lucky, if this gets back into the fives, these are all going to be your ultimate buy zones. Now, if we do get closer to the fives and we drop below sixes, that's going to create a potential triple bottom test, making it very, very strong. So if you notice, this price here is a little bit lower than this price here. What you could be running into would be an inverse, okay? An inverse head and shoulders. Now, an inverse head and shoulders from technical analysis standpoint is very, very bullish. So if this continues to drop down here and puts in a little bit of a higher low than where we stood right here, you could see maybe a back test back into this range, followed by a slightly higher pullback, and then we start to break out. Okay. Now, timeline wise, what are we looking at here? I'm still saying closer to March, mid-March, when we really start to see things ramp up. Obviously, we would like to see things ramp up, now faster. But again, you just have to be patient. The best way to kind of make money in these type of markets and to make money on these type of plays is to be very, very patient and make sure that you're adding in the right spots. If you're buying closer up here and then you pull back, you feel in a tremendous amount of pain and it forces you to want to sell out of your position. What I think that needs to happen here, we need to see a little bit of a rotation from some of these soul boys that are chasing these essentially just pump and dumps, right? Essentially just pump and dumps that are heavily influenced by insiders that are kind of running these prices up on these launches and then extracting all of the liquidity out. It's leaving a lot of people kind of uneasy right now. The last one being the Argentinian presidential, Libra coin token, whatever it was. I mean, they're kind of wiping out a lot of liquidity into the markets. Now, whatever happens with that, happens with that. But what we need to see here on a little bit more stable meme plays is we need to see that kind of market kind of wear off a little bit. And once that market starts to wear off a little bit and people start to have a little bit more conviction in some of these other longer term plays where you can kind of just dollar cost average and hold and, potentially make 5, 10, 15, 20x on your money, that's when you're going to see it. So again, let's just go over those prices. Dollar cost average zone anywhere between 5s and 9s for the 2025 run. Obviously, you want to be closer to 5s and 6s on those dollar cost averages. Again, the steal zone is anything below 5. I don't know if we're going to get there. That would call for a lower price to be put in far past this double bottom. I don't know if that's going to happen, but again, just kind of maybe set an alert for anything under 5, right? That way you're alerted. And if you do want to place that order in there and kind of, get that average price down a little bit, you can definitely do that. If not, if you're anywhere between 5 and 9, just kind of sit back and be patient. If you're done dollar cost averaging and you're all in, just sit back, relax, and let the chart do its thing. Again, no need to really check it on an hour by hour, minute by minute basis. You're going to know when things start to pop. You're going to know. You're going to see it on social media. You're going to see it somewhere else. So don't stress out too much right now. Again, I still think we need to get into March before things start to settle down and before we can start seeing some higher prices. To the upside, what we need to do so we don't come back down towards these prices is we got to get a strong close over 9s. Okay, that's right here. We got to get a strong close over 9s. So what you really want to see is you want to see a strong close, and we're looking at a 4-hour time frame on this chart, but you really want to see a strong close over a previous swing high. So our previous swing high from here is February 13th at around 4 p.m. You want to see a strong close over that. If you notice each potential bounce that we've had, it's lower than the previous, okay? So on a short-term basis, it's bearish. So in this particular chart setup, if we do start to crack below 6.7, 6.5, you probably could expect some touch down into 5s, and then that next bounce, if it's going to continue this narrative, is not going to take out this high, which this high is right around 7.7. It's going to kind of bounce up here maybe to high 6s and crack 7s and then come back down again until we close over a previous swing high. So notice how this bounce right here, right? Let me pull up the drawing tool. Notice how this bounce did not take out this high. Okay, so anytime you bounce, like this bounce did not take out this high, just like this bounce did not take out this high. Until you start to take out this staircase, right, and you start to get some definitive closes over, what you would want to see is maybe a sweep down here and then a close over this swing high and then a pullback to this swing high and hold, and then you want to see a close here. Ultimately, we want to see that close over 9s. So when we're dealing with price action like we're dealing with right now, which is all of this pullback and consolidation, when we're dealing with that the next time, we're dealing with that here in this range, which is over 9s. That's going to give you a strong move where you can start attempting to retest those 12s and 13s, and then you do the same manner. And that's essentially a healthy market, and that's essentially a healthy chart pattern that you want to see. So until we start to see that, maybe you guys can just pull it up on your charts and kind of just mark out those previous swing highs and just tell yourself, just sit patient. There's nothing really going to happen yet until obviously Ethereum starts to really bust through 2,800 and 3,000, or until Toshi starts to really, reclaim a previous swing high and consolidate over that previous swing high. Hope this video helps you guys. Again, I'm still dollar cost averaging down. I did average down into this, buy more into this downwards pattern or downwards candlestick this morning. I will buy more if we do break this trend line and we get down into 5s. Ultimately, I'd like to, finish loading up down in this area. But again, I don't really know if we're going to get there or not. Once Toshi starts to really push, those candles move very, very quickly to the upside. So again, just watching the chart very, very closely, I think it will within the next 2 weeks get, closer to that bottom, and we will start to tread upwards versus, continuing to tread downwards. Again, just keep your eye on the overall market. Another note that I want to put out there: You need to watch Bitcoin dominance. We want to see Bitcoin dominance start to drop from 59%, 58%. We want to get that closer to 50% and just a little bit below 50%. Once you get that Bitcoin dominance below 50%, you're going to see a strong move in a lot of these altcoins that are stable, right? I'm not talking about all of the, the stuff on Pump Fund and all this, fly by night shit. I'm talking about the stronger projects, things with utility, things that have been around for a previous cycle. Those type of names will start to get a lot more juice rolling into those charts as soon as we start to see some of those actions play out. Hope you guys enjoy the video. Make sure to like, comment, and subscribe, and I'll see you guys on the next one.